I'm Victor. I like recording videos sharing my investing journey as I look at stocks, invest in stocks, analyze stocks, as well as bonds. And my intent is to beat the S&P each year and grow the savings that I have for my family. Really benefit from other YouTubers sharing their analysis online. I've been on YouTube for 5+ years. I've been investing for more than 25 years. So thanks to all the YouTubers that record videos and share their investing ideas. This video is going to cover the past week of the stock market as I saw it and what my plan is going to be to invest this coming week in both stocks and bonds. So year to date for 2023, the S&P is a little under 4%, which is looks good on paper. But as I'm sure you've noticed over the last 3 weeks, the S&P index has dropped more than 5%. So from February 2nd to this point, it's dropped 5.02%, which is a pretty big drop. Main reason is that interest rates are going up, and they've gone up considerably. Over the same time period from February 2nd, they're up 55 basis points, which means that what a 10-year Treasury used to pay on February 2nd compared to now is 55 basis points different. And that is a 16% increase on interest rates just in 3 weeks. So that's a big, big jump. And that's what led to the stock market losing so much value quickly. I think it's going to persist. It's going to continue. And the reason for it is that inflation is not being controlled by the Federal Reserve yet. They'll keep increasing interest rates because that is the weapon of choice to try to calm down inflation and control the economy so that we don't continue to grow and continue to have this very high inflation. So that's going to be the theme of 2023 is high inflation is going to drive higher interest rates. And that is going to then create lower valuations for stocks. Stock prices will be lower. It's also going to create better yields for bonds. Bonds will pay higher rates of return. So those are the dynamics for 2023, and that I'm taking into account as I make my investing decisions. You know, what I saw last week is weak earnings from Walmart and Home Depot kind of set the tone for the week. They came in with a lower than expected, retail activity for these two big retailers. And I think it's settling in that, we're in a recession or headed into a recession, but that's what's going on. The other thing is that inflation is still incredibly high. So the Federal Reserve has no choice but to continue to raise interest rates. And they'll continue to raise them until you start seeing things break. Like, oh no, we've got unemployment rising. We've got, home prices are collapsing, which they already have, but in general, they're collapsing. So all those things will begin to happen. The rates are going to stay higher, or they're going to go higher and stay at higher levels longer. So that's what's expected now. I think for the coming week, stocks are going to be flat. One day we may be up, one day we may be down. But I think if you measure from the time the stock market opens on Monday to when it closes on Friday, I'd be surprised if we're that far different. The remainder of 2023, again, the big story, interest rates. They're going up, they're going to stay up, and we just have to deal with them. I think the criticism of the Federal Reserve is just beginning. You're going to continue to hear that the Federal Reserve is doing a terrible job, that they're going to run the economy into recession. We have an election year coming up in 2024. So I think the criticism of the Federal Reserve is just going to increase, which is going to create noise. Those things, I think this year, the volatility is going to be there. We're going to have ups and downs. But now I've changed I thought we'd end up higher this year, coming off of a down year last year. I thought we'd be up 5 to 10% this year, but I've changed that. I've actually think that we could end down 5% and we can end up 5%, but it's not going to be a big move. We're going to stay within 5% up or down for 2023. That's my expectation. So in every market, there's opportunity. every single market, whether we're in the market we're in now or a boom period, there's always an opportunity. And it's up to me to do my homework and be ready. Be ready to buy stocks that are discounted, be ready to take advantage of bonds that are producing a really high yield. I'm going to be buying more stocks this week in companies that I really want to own. I want to own for a long time, and just buy more shares when the prices drop. I am expecting volatility this week, so I'm expecting there's going to be opportunity to buy more shares, and I'm going to buy more bonds. I'm going to show in a couple slides that the yields are really looking good, and it's safe money to make 6%, 7%. I'm keeping an eye on 6 companies that are going to have their earnings. So these 6 companies have earnings coming beginning on the 27th, and then they'll go until Friday. Big Five is a discount retailer. I've recorded a video on Big Five, and I'm really up on this stock. And the reason for it is they're profitable. They generate free cash. They really know how to run their business. They pay an incredibly high dividend, and I believe they have high upside. So their earnings that comes out, if it comes out and they're positive, this stock's going to really pop. And I'm going to read the earnings. I'm going to listen to earnings call just to see how the company's doing. I've listened to collectively 20 earnings calls, if not more, on this company. So I get to know their senior management. So I'm looking for Big Five. Zoom is a critical company in today's economy, with everybody doing social distancing and all that stuff. And I think people have really gotten used to just working from home. And they announce on Monday as well, after the bell closes. I'm looking to buy more shares of Zoom, especially on down days. I think there's upside in the stock. And again, same story is, if Zoom grows, they show growth. It's expected that the revenues are supposed to go down. I expect they're going to show some modest growth. If they show modest growth, profitability, and free cash, that stock's really going to pop. Hewlett Packard's going to announce on Monday as well. And Hewlett Packard's just a great run technology company, pays a good dividend. So I'm going to be looking to see how they performed. I wouldn't be surprised if their revenue dropped a little. They are, selling PCs and certain technology equipment to consumers. So I could see that, and businesses. I could see that dropping a little bit. Broadcom is going to announce on the 1st. That's my favorite semiconductor company. And these guys just perform quarter after quarter, year after year. I'm expecting they come in line with their expectations, and the stock may go up a little, may stay flat, but they keep paying that really nice dividend. So if there's any down day on Broadcom, I'm buying. Kroger, I've got a big position in Kroger. Really like the company. It's, I think, recession proof, since it's food, and we're going to continue to eat food no matter what. So looking for their earnings to come out on the 2nd, and no big surprises expected there. Good update on the acquisition of Albertsons, and I'll continue to hold my position unless something really interesting happens. But again, I've got a large position with them, so increasing my position is probably not a good idea, and they pay a good dividend. Macy's, I've owned Macy's off and on for 20 years. And, my current position in Macy's is a good one. I'm up on the stock, and it has a lot of upside. I think Macy's, in a lot of ways, benefits from, a recession in retail, because other retailers really suffer, like Nordstrom's, but Macy's keeps operating better than the rest, and they keep taking market share and operating well at a profit. They also pay a good dividend. So if Macy's comes out with a good earnings report, that stock should really go up. If they come out with an earnings report that's in line with how I think they ought to be operating their company, and the stock goes down, I'm buying more shares. So that's my 6-pack of companies I'm looking at this week and paying close attention to them. If you want to watch videos on these companies, I've recorded them. Look at the channel, and you can take a look at each recording that I've made on each company. Also going to be adding to my bond portfolio, and the 3 ETFs that I'm buying are the Vanguard short-term ETF, the intermediate term ETF, and the long-term ETF. The short-term ETF really pays a nice yield, 4.5%, has very little risk because it's short-term. So you don't have a high exposure of losing money on bonds with this ETF. but it pays a really nice yield, especially since, February 2nd, the S&P is down 5%. That's going to affect a lot of portfolios. So having 4.5 be a solid, gain is a good idea for me. Intermediate bonds are also paying a good yield. They have a little more risk, but I'm adding positions, or I'm adding more shares of this ETF into my portfolio. And just the last ETF I'm buying is the Vanguard long-term bond ETF. And this one's got more risk, but this one's been moving very quickly upward on the yield curve. I'm also going to look to buy additional individual bonds. This bond here from Ali, I already have a position in this bond, and it yields almost 7% at 6.8%. I'm very familiar with this company, believe that they are a well-run company, and just a very, very good yield, close to 7%. So I'm going to be looking at that, especially if rates keep increasing. I might be able to get a 7% yield out of this bond. So I'm going to be really, really interested in that bond. Next one is a communications company, very stable industry, and it pays over 6% at 6.2%. And ditto on my last comment, if interest rates rise, especially on the long end of the yield curve, this may, jump up to 6.4, 6.5, and a yield of 6.5 on a communications company. Love to have that in my portfolio. And the last bond I'll highlight is from General Motors. We all know what General Motors does. I think it's being run really well. And this particular bond is at 6% currently on the yield. Again, if interest rates keep going up, that might end up being 6.2% this week. I'd love to jump on more, these bonds. I already own a position in all three, but I'd love to add more so that I can have that, steady income from bonds. All right. So as I head into the week, I'm ready to buy the right stocks at the right, discounted prices. I'm also looking to buy more bonds with the yields going up. It should be an interesting week. I think we've had a couple of tough weeks, back to back. And this week I think is going to be flat. But nonetheless, there's always opportunity in the market, and I'm looking for it. Hope you found this video interesting. Good luck investing in 2023.